What's up, everyone? All right, so in today's episode, I'm going to break down my trades for the day. It won't take long because guess what? No trades. It's a no trade day. My second no trade day of the year, or maybe it's my third. But in any case, I will break down what I was looking at today and how I came to the decision to not trade. Obviously, if I knew it was going to be a no trade day, I wouldn't have even sat down at all. I sat down this morning at 7 a.m. because I expected I would find some opportunities. Unfortunately, as the morning went on, nothing really presented itself that was worthy of breaking the ice on. And that's what it's all about. It's about breaking the ice. That first trade is kind of building a cushion. And the first trade, in a lot of ways, is the hardest because right now, at this moment, I'm zero on the day. I have zero trade, zero profit, zero loss. So when I take that first position, I buy a stock at 323 and it's 320 on the bid, I'm red. So essentially, when I take my first trade, immediately I will go red just based on the spread. So it's like the moment of truth. Is this going to keep going or am I going to end up selling it for a loss? So that naturally makes me a little bit hesitant and a little bit cautious on that first trade. So how do I deal with that? Well, I increase my quality threshold. So for instance, right now, this stock is in the scanner FORD, $12.44 with a 1.4 million share float. Should I jump in that here? Well, just because it hit the scanners, now I get a reason to jump in. So let me show you what the level 2 looks like. So the next thing I would do is I would pull up the level 2, so FORD right here, and you can see we've got a spread of 1189 by 1249. So if I bought 1,000 shares of this right now, right here, I'd be down over $500, $600 just on the spread. So in order for me to pull the trigger on this, I would need to feel a pretty high degree of conviction that it's going to move higher, which means I'm going to look for what's the news, right? What's pushing this thing up? There's no fresh news, so it's probably not going to do much. Looking at our leading gainer today, ALLR, this is a grinder. I don't like trading these stocks. It's got 236 million shares of volume. So yes, people were focused on it, but for me, 14 million share float, under $2 for the majority of the day. This is the type of stock that, if you buy it and you just set your stop and kind of walk away, it can work. But for traders like myself that are so tuned to be active, to buy the dip, sell the pop, to buy the breakout, sell the break, to buy the breakout and then sell as it pushes higher, you just don't end up getting those types of moves. And you'll actually end up losing money. So as I've looked around today, for me, it's a no trade day. And for a lot of people, I'm seeing that it's a red day. And so I kind of feel like, well, if I had to choose between flat and red, I would choose flat on the one hand. On the other hand, flat is a bit of a defeat because it's like, wow, I came here, I sat down, and there was nothing that looked good the whole day, right? So, that is a little discouraging. I guess at least on a red day, you must have thought something looked good enough to trade to break the ice. So ALLR, that was no good. Price too cheap, float a little high. HKPD, I've traded this one before. Same issue. It's cheap. It's a grinder. Most of this move has been since the open. So, coulda, woulda, shoulda, but I didn't have a cushion on it. It's also a Chinese name, Hong Kong Pharma Digital. So a little bit hard to trust. SATS, $53 a share, 126 million share float. IVVD floats too high. STKH floats lower, but price is lower too. It's too cheap. So unfortunately, we just get into suddenly the gap scanner is dead. So, this is the environment that we're in. Overall market, S&P 500. Well, we know we had the big day on Friday. And then Monday was a pullback day, and Tuesday, we're gapping down a little bit, popping up just a bit here, but we may pull back a little bit more. So what wouldn't surprise me on the daily chart with the S&P, sort of a flat top up here, a little pullback coming back up for another test. Maybe it doesn't go, pull back again, and then a breakout, unless we get any economic data that sends us back down. So, we're in a little bit of a funny spot here. Realistically, next week is the first week of September. So this is a week where it's the last week of summer. A lot of big money folks are, moving, back from the Hamptons to the city or, whatever from their summer travels. Kids are getting ready to go back to school. So it's kind of a time that we typically expect to see lighter volume, lower volatility. And so far, that has definitely been the case. So, yeah, at this point for me, I'm, just, I guess, maybe somewhat reluctantly walking away, just accepting that it's not going to happen. And, survive till you thrive, live to trade another day. So, in terms of the goal for the month of August, I'm way shy of where I had set, but I'm green and I'm grateful to be green. And as soon as I start losing sight of that, that's when I'll start making mistakes. So the glass is half full. I'm really fortunate. And I'll be back at it first thing tomorrow, 7 a.m. And hopefully tomorrow we've got a better looking gap scanner. That's what we can hope for. So reminder, as always, trading is risky, easy come, easy go. And you got to go with the ups. You got to go with the downs. You just got to just go with the flow because there's nothing else you can do. You can't fight it. So please take it slow. Practice in the simulator before putting real money on the line. And I'll see you guys back here streaming at 7 a.m. Eastern tomorrow morning.